or whoever just started a recording. It reminded me to start a recording as well. Welcome to the group. Our speaker today is going to be Sam Wilson. I see that he's in guest mode. I'm going to switch him to attendee so that he can present. At the moment, I don't have too many club announcements other than make sure that you sign up at meetup.intel.com if you want to receive future announcements of club meetings. At the moment, and for this particular month, we're running this particular series or this particular meeting every Friday. And then next month, we're going to try moving over to a every other week model, where it's just twice, probably on the second and fourth Fridays of the months. There is a Yammer poll that's up to ask when people would like to have this meeting, whether it be once a week, once or twice every month, or once a month. And so far, only 4 people have posted their opinion there. So please go over to Yammer and find the Real Estate Investment Club channel and look for that result. I'd love to get feedback about what people's opinions on that are. Upcoming, we also have Amanda Hahn, who is a real estate tax specialist, and she's going to be sharing a little bit with us on how you can save on your taxes using real estate. And we have, I need to find his name in front of me, but we also have a guest speaker who's going to be talking about how you can promote community within the rentals that you have. So if you have rentals and you want to make sure that it's a wonderful place to live, he has a variety of ideas on how to do that and has been speaking on that. And then also coming up, and this one is not scheduled yet, but I'm going to try and get this person in very soon. We have Courtney Buck, who is a real estate investor who happens to work at the Centers for Disease Control. And so he's going to come in and talk to us about the Centers for Disease Control and how he sees the current crisis in light of his real estate investment work. So look forward to that soon, and I will post that one up on the site very soon as well. Sam Wilson, can you hear me?
Yeah, I got you loud and clear, Daniel. Can you hear me?
I can. Great. Are you able to share?
I am. Yeah, certainly. Is now a good time to start?
Yeah.
Awesome. Well, hey, thanks everybody for joining us here today. Certainly do appreciate it, and thank you, Daniel, for putting this together. I understand you block out about an hour for this, and I'm going to be nowhere near an hour presenting, so there's probably many of you that just sighed a big relief, I'm certain. You know, what we invest in is actually in parking, and I'm not sure if there's a bio. I'll just tell all of you who are techies, because obviously this is an Intel presentation, that I can barely send an email. So, you know, talking to a bunch of tech people, if I get something wrong or don't present it right, it's because I just have absolutely no technical skill whatsoever. I'm going to try to share my screen here. I'm not sure how exactly that works. If I just hit share, that should share the screen, right?
You have to hit it twice.
Share screen, share screen. Okay. And then go to present. Can you guys see my screen?
It's coming up. Yep.
Okay, great. So has everybody got this main screen here?
Yes, we can see it.
Okay, cool, great. Just wanted to make sure that I got this right. Okay, so obviously the name of our company is Parking Your Investments. Full pun intended on that. And what we do is obviously invest in parking lots and parking garages across the U.S. I'm going to kind of give just a quick rundown on our team, the types of assets we buy, what our business model is, and then who invests with us and why. The short of it is my name is Sam Wilson. I'm based out of Memphis, Tennessee. I handle our acquisitions and investor relations, do a lot of off-market research. You know, that's been actually the bulk of my time actually doing research and finding assets for us to buy. And then John is really the brains behind this. John's been in parking for almost 20 years, and so John brings most of the real technical expertise into what we should pay and all the kind of industry contacts to the table. So John is actually based out of Fort Worth, Texas. So John and I have been working together here for the last few years, And that's our team. You'll see why we're such a light team here in a little bit. This business really does not require a lot of hands on deck to make it work. So my business background a little bit, I owned a flooring company up in Indianapolis for quite a few years. We sold that in 2012. Since then, I've been involved in a variety of businesses, still have several of those running, do a lot of still single-family real estate investing. I've got a bunch of rentals in Memphis, and then also right now, obviously, my main focus is on acquiring parking assets. There's reasons I've kind of transitioned out of single-family and other types of real estate and gone into parking, and we'll kind of get into those here. So obviously our mission is to help investors create passive income through investing in parking. I mean, it doesn't get much more simple than that. And I think the key word here for us is passive. Really one of the things that we want to focus on is acquiring assets that are easy to manage with minimal downside risk. So again, why we love investing in parking? Really, there's three reasons. And I just kind of mentioned those. One, it's easy to manage. Two, there's minimal risk in parking, and three, there's consistent returns. If any of you have money in the stock market right now, you can probably agree with the consistent returns is really key when we can count on the money coming in and not really worrying about it is one of the reasons I really love parking. That said, how is it easy to manage? And I'm going to go through and just kind of explain some of these things. If you got questions, hopefully I can answer them. We'll obviously do a question and answer here at the end. But for us, when we buy an asset, and we're different in this, a lot of people who are in parking will both buy and operate. We do not want to operate our own lots, and there's a variety of reasons for that. So for us, we acquire the asset, and then we plug in a third-party operator. So once we buy the parking lot, we have an operator that goes out and handles all the day-to-day management of it. So they will take care of, installing the meters. They will take care of booting cars that don't pay. They will take care of putting attendants out on nights and weekends when there's ball game traffic or whatever is happening. Our operator handles all of that. So for us, the hardest part is actually going out, finding and acquiring the assets. And then after that, once we own it and the operator's plugged in, really bookkeeping is our only management task, which is pretty great. I always like to say that once we acquire the asset, my phone will never ring again, which is obviously tongue in cheek, but it really won't. Unlike a lot of other real estate, once you acquire it, the work has really just begun. I can certainly tell you that from the single family and even multifamily side of things, that once you acquire the asset, the work has really just begun. But in parking, once we own it, the hard part's over. Minimal risk. We'll go through the types of leases that parking typically has, and this is kind of true industry standard wide. There's two types of leases. One, there's a management agreement, which is really probably the more standard type, which is where, let's say this garage here we're looking at, it generates $500,000 a year in revenue. The operator would say to the owner, hey owners, we'll split it 80-20. And there on out you go. So the owners get $800,000 or $400,000, and the operator would take $100,000. The other type of lease that you could work with is what we call a guaranteed lease, and this is the type that we do just in order to minimize our risk. A guaranteed lease basically just says, hey, the operator comes to us and they say, look, this is what we're going to pay you for 5 to 7 years. No matter what happens, you're going to get paid X amount of dollars. And of course, we're going to take a little bit of a cut. Maybe on the amount that we could have made, but yet we also minimize a lot of the risk that can be associated with the fluctuations in parking, seasonal parking, things like that. So we have annual increases in our leases, and I can tell you 7 years out from now what we're going to get paid on a particular parcel, which is pretty great. Consistent returns. With that minimal risk, easy to manage, obviously your returns in parking are not going to be nearly they're not as exciting as, say, what you might find in multifamily or some other asset classes because of its stability. You're typically looking at about a 6 to 8% cash-on-cash return. So if you plug your money into a parking asset, if we can make 8% on it, we feel really good about it. We try to cash out refi, which obviously once you cash out refi all your investors, it's an infinite return after that happens, typically in year 3 to 5. So it's always possible to cash out refi those investments, as we get further down the line. Obviously, there's appreciation on especially land plays in larger cities where people are paying for parking. there's always going to be appreciation because there's not really any more land being built. And you know, you can always sell these assets for redevelopment, even if it's a garage or a just a parking lot. Obviously, parking lots are a lot easier to convert to other uses, but you know, certainly always possible in all of those. Our business model really, like I said, is on the finding side. You know, finding assets and investors. People ask me this question. We'll kind of go through how these different steps work, because they ask all the time, well, how do you find a parking asset? I'll just say that there's no national database for this. You can get, I don't know if you guys have heard of, I'm drawing a blank on it now, the national supplier of database information for a lot of real estate. Gosh, I can't think of the commercial name for them. I went to them and said, hey guys, do you guys have any data on parking lots and parking garages? And they have everything. They have it down to, like, I mean, these guys fly planes around the country just to see what's being built in multifamily. I said, no, we don't have a lick of data on parking lots and parking garages. So for us, we actually have to go to the city and walk the city to actually find the lots that we want to acquire. You might say, why don't you use Google Maps or use parkme.com or use some of these other sources? A lot of that data is really it's just incomplete, missing, or inaccurate. So for us, we actually go to the cities, walk the streets, figure out exactly which assets we want to acquire, and then go back, do our research, and start making offers on those assets. And then, of course, once we acquire it, we then go to our operators, we get leases in place, and then we begin the improvement process. You might say, well, how do you improve a parking lot? Well, I'll tell you that there's a couple ways that you can do some value-add improvements. Obviously, there's resurfacing and restriping of parking lots. There is the biggest one really is lease renegotiation. So the industry is a very fractured industry, which is great in that a lot of these assets, I mean, we've got a deal we're working on right now. The family has owned it for over 100 years, I think 106 years. And at this point, there are 16 family members that own these assets, or this particular parcel we're trying to buy down in Texas. And with that, they just have not been paying attention to the lease that they have. So for us, a lot of our value add comes from just knowing what these lots can produce, what they should produce, and then going back to our operators and rewriting those leases once we acquire it. So once that happens, we own the lot, we've improved it, we then just hold it and do quarterly distributions on it. Our plan really is, if we can cash out refi our investors, once we've done our value add strategy and say we can cash out refi our investors, our plan is to really hold it indefinitely. There's not really a reason to get rid of, as the old expression, don't shoot the milk cow. We just don't want to do that, and there's no reason to. Once we've gotten our money back out of it and it's producing an income, we really want to just hold that for as long as we possibly can, unless, of course, an offer comes along that we just can't refuse, which has happened. So that's really the business model. Our strategy, we focus on 10 to 12 select cities where there's favorable taxes. Taxes are a big killer, and we'll kind of get into that make a lot of these deals not work for parking anymore. Long-term population growth, job growth, and stable government. There are just some cities that we looked at several assets last year, and when it came down to it, we even went so far as to looking at their unfunded pension liabilities and some other things. We said, man, this is just going to be bad. We cannot invest here. So for us right now, the Midwest is still a great place to find parking assets. We invest in the Mid-South and then certain high-growth cities of the South, particularly there in Texas. So parking versus other asset classes. For us on the left-hand side, consistent returns, we have a 5 to 7 year lease with a national operator. A lot of other asset classes, going back to multifamily or something else, the revenues are unpredictable, and they're typically projected based upon a value add that may or may not take how much ever time to actually get accomplished. And if they can't ever get the revenues where they're going. For us, we know right out of the gate what we're going to make. For us, payments begin immediately. A lot of times, and I'm involved in a lot of different real estate with my retirement funds, because I can't obviously invest those in my own deals. So I've kind of got my hands in a lot of these other sectors as well. But, we may have delayed returns or payments, or, 5 years before we start getting money back out on some of these projects, especially larger build projects. So for us, the operator, not us, the owner, the operator that we put on these lots, they assume the risks. So let's say that no one parks in one of these lots. I do care, but I really don't care, because they still have a lease with us, and these are national operators that are traded on the NASDAQ. So these guys have every motivation in the world to actually make sure that they pay what they've agreed to pay. We don't work with small mom and pop operators, unfortunately. It just doesn't work for us. So in this case, the operator assumes the risk. Whereas on some other asset classes, obviously the owner being the say you're an apartment complex owner, you're the one assuming the operational risk if things don't go as planned. So, and we also have potential upside if thresholds are met. So with our guaranteed leases, obviously I said it earlier on that, hey, with these we may take a bit of a haircut, if you will, in the fact that we want to kind of, we want that stability and minimal risk. But if our lot performs particularly well, we do have some revenue sharing potential there. And of course, lastly, the appreciation factor again. So that's kind of this, parking versus other asset classes. And again, with all of these, your upside isn't as strong, maybe, but we're okay with that. So people ask us commonly financing, how do you finance a parking garage? We have some select lenders that we work with that understand parking really well. So there's a few select banks. We can typically get 80% loan to value on these, which is really great. So we only have to raise about 20% of the purchase price for these assets. And we don't get quite the favorable terms on lending, say that some other asset classes would. We typically have a 10-year balloon, maybe on a 25-year amortization schedule, whereas some multifamily, obviously, it's 30-year plus fully amortized. And we just can't quite get those terms, but that's okay. For us, and you say, well, how do you value a parking lot? It's much like you value just a regular business. It's based on the income approach. So we have a little lot down in Houston. You wouldn't think anything of it. You drive right by it and say, man, that's a dumpy little corner lot. Like it literally parks 19 spaces. I can't quite get into numbers on that, but it's absurd what those 19 spaces produce, just because of the demand that is produced, or the demand that area has. So that said, we paid a lot for it. But the bank was okay with it because they said, oh my gosh, like this is the lease you guys have on these 19 spaces, and they're quite happy with it. So that's how you finance it. Some of the challenges that we currently face in parking is that a lot of cities are really trying to crack down and get rid of surface lots. I don't know what it's like where you guys are, and I haven't quite figured out the why. But there's a lot of complaints. People, surface lots are ugly. We don't like surface lots. If I have a choice between parking on a surface lot or parking in a garage, I would much rather park in a surface lot. But, these things are going away. So a lot of city councils and other people are trying, even in Memphis, they're trying to eliminate surface parking lots as much as they can. Another challenge that we have, obviously, is with taxation. So we look heavily at the tax structure and try to bring on as much help and tax consultants that can help us kind of negotiate or navigate these waters of tax. So as taxes go up, we have pulled out of a couple of markets simply based on taxation, because the numbers, obviously, if you're working with a lower return environment, taxes can just kill the deal altogether, which a lot of times it does. And the last four are kind of all the same. But, with that increased cost of land, and when we wrote this, we said real estate market is at its peak. We're not really sure where it is right now, to be fully transparent. Not sure what this new wave of kind of insanity is going to bring. But still think things are at a point right now where we kind of need, some kind of softening in some of these prices to really go back to buying as strongly as what we were at another point in time. So that's kind of some of the challenges that we're facing in parking. We'll go through a typical deal structure here. So for us, we say, hey, it's a $50,000 minimum investment in the deals that we do. Of course, you can use any of your retirement accounts, cash, et cetera, to invest. We are the general partnership, and then there's a limited partnership that owns the LLCs. This is just the way that we always structure it. There's the limited partnership, the LLC, that actually owns the asset itself, and that's for all the passive investors. We always invest in every deal that we buy. Every deal is unique, so we don't run funds, or we don't do a fund structure or anything like that. Every asset is its own set of docs and terms, and like I said, you can typically expect a 6 to 8% return on your cash invested in a parking asset. So who invests in parking? the people that like to invest with us, they want an extremely stable investment. They say, hey, look, I'll trade off some of the potential upside for the stability of return. Obviously they're risk averse, looking for portfolio diversification. I wouldn't say that parking would be 100%. It shouldn't be 100% of anyone's portfolio. It's certainly not of mine. But somebody also is looking for immediate returns and long-term passive income. So that's kind of the investor slash, portfolio diversification segment that we shoot for in, who invests in parking. Frequently asked questions that we have, what about self-driving cars? Is that going to kill parking? Well, yes, no, maybe, probably not anytime soon is what we see. Maybe you guys, on the West Coast may think differently, but come to Middle America and self-driving cars really aren't affecting us any. Also, if self-driving cars come, and given that parking is typically purchased in dense urban centers, what we own can always be redeveloped for other uses. So even if we do buy a parking garage, or even if we do buy a parking lot, okay, so say parking goes away entirely, you still own land in a downtown area where, lots of people are going. So not too worried about self-driving cars. How does it fare in a recession? Well, let's just say that we don't really know how it fares in a virus recession, just because, these are uncharted waters for everybody, and I'm sure you guys can attest to that. But how does it fare in a recession? Typically fairly well. And again, this goes back to why we write the leases the way that we write them, in that we want to know 5 to 7 years out what we're going to get paid, and kind of have that stability already built in for us. We already kind of went over some of the risk. Of course, some of the risk in any type of real estate investment is the deal goes south, which is, yet to happen for us. But, typical returns, of course, we went over that 6 to 8%. How long is the investment cycle? We try, and I kind of talked about this earlier, we try to cash everybody out in years 3 to 5. But the intended investment cycle is indefinite. Obviously, it's not going to go on indefinitely, but that really kind of is what we're shooting for. Is we have no particularly planned exit necessarily, especially if it's producing a respectable income. What about Uber? That can affect things to a point. But we haven't seen that, really affect us too much. Ever try to catch a Uber after a professional football game, and you'll see what I'm talking about. Obviously, they're getting better at it, but still, things like that can be the expense of Uber after, big sports events and stuff like that just kind of make it not really make a lot of sense. And also trying to stand on the Uber line or the Lyft line or whatever you're trying to do. I've stood in plenty of those to know that, man, I should have just paid the $20 and parked. So could our operators fail? Yes, absolutely they could, just like any other business. Have they failed? No. Have we seen operators go out of business? No. That's just an inherent market risk that you're going to take. And of course, then we also went over how do you find deals. Like I said, we find those, just actually walking the city, marking them off on a map, and going back or on Google Maps rather, and then we go back and do our research and find them. So that is, really the end of the presentation on parking. I feel like I went through that at 500 miles an hour. And it's all clear as can be to me, but maybe not to you guys. So I guess at this point, would love to hear any questions you guys might have about the parking industry.
I have a question, Sam. This is Daniel. When you are giving control over to the operators, is that a triple net lease, or is it some other type of leasing structure?
That's a great question, and I will say that depends. That's a per asset question or per asset answer. So some assets, depending on the condition of it, they may say, all right, look, it's triple net. They may say, and again, we work with different operators around the country. So one operator may do triple nets and one may not. And it also, again, depends on the asset. So if it's in bad shape, they may say, hey, look, you guys take care of paving and restriping, start out the gate, but then we'll do it 10 years from now.
Can you define triple net asset really quickly in your business?
Sure.
How that works?
Right. So it'd be taxes, insurance, maintenance, and then I'm not sure actually even what the third one would be. Common area maintenance. That we don't have any of that. So they would basically cover everything relating to the expense of owning the asset. So that would be a triple net lease in my book. I should know the answer to the third end, but here I am not pulling that up. So does that answer the question?
Yeah. And I'll let other people ask questions, but I also want to ask a question about how you go about evaluating whether a parking lot is worth purchasing or not. What income? How do you evaluate the income, and how do you know whether it's something you want to pursue or not?
Sure, I'll just answer that right out of the gate. We go to our operators. So as part of our underwriting process, we'll go to our operators and say, hey guys, like, here's the lot. This is it. And they will go and actually do traffic counts and come back to us and say, hey, this is what we can pay you for this lot. And once we have that number, we can then obviously make an offer to the seller. And if the offer works, then it's something that we can pursue. And if it doesn't, then it's dead in the water.
All right.
So does it have any kind of like a tax depreciation benefits or anything like that with this?
Great question. Not on land. There's no depreciation on land. On a garage, yes. Certainly there, and that's kind of a downside to parking is that you don't get the depreciation benefits. But if you did buy a parking garage, yes, then we can depreciate those.
What about the meters and other things that are used to track the parking? Are those considered land improvements that you can depreciate?
No, and all of that is owned actually by the operator, so we don't have any exposure on that front at all anyway.
We've got
So the parking, sorry, the parking garages does have depreciation, right? So you'll be kind of sending out a K1 or whatever.
Correct.
Oh, okay.
Hi, this is Kimberly. I have a quick question, and I don't know if this exists or if it's even possible, but are there any parking lots that are, or is this possible to have parking lots that have tax liens that you can acquire? And if so, is that beneficial?
Unlikely. You know,
Okay.
the obviously this being a commercial industry, you know, the players in this are smart enough that if they're in that much trouble, they've already reached out to their other industry partners and said, hey guys, we need a bailout. You know, I'll sell you this and move on. They're not just going to end up, you know, getting in trouble with, you know, the government on taxes.
Okay, I was just thinking of an easy way, you know. Okay.
Sure.
Okay.
Great question. Great question.
Okay. Sam, hi, this is Niharika. I have a super basic question. Maybe I missed it or something, but I want to ask you, like, what is there in this for somebody like us who are like having full-time tech jobs and something in 20s or something? How do we enter the space? I know like you have a full-time company doing this or something, but how do we get started on something like this?
Sure. I mean, you know, I would say, you know, shameless plug, you would come along and invest with somebody like me that's already in the business. So, you know, that would be if you really want to go passive income, you would say, hey, Sam, you know, I see you have an opportunity. Let's invest in that. But assuming that you don't want to work with somebody like me and you really want to get your hands in and do it yourself, then you kind of have to go through the steps I've already outlined, which is to, you know, go out, find the assets, find the owners, talk to some operators, and start, you know, see if you can package a deal up and put it together. It's not rocket science. So certainly that's doable. I don't know. Does that answer the question?
Yeah, it does. So you are looking for individual investors like us, like that is something you have done in the past, deals like this.
Absolutely.
Okay. Okay, and the way to get started would be like go on your website or something, connect with you or something, or
Yeah, and I was going to go through that there in the end. If you want to,
okay.
you can go to my website, parkingyourinvestments.com. Just plug in your email. I don't send out maybe an email a month, so if don't worry about putting your email address in there. It certainly won't blow you up. But if you put it in there, then you will get notified when we have an opportunity to invest in something.
Awesome.
What is the website?
It is parkingyourinvestments.com.
Maybe you addressed this already, but why would you do this over any other investment? Why is this, you know, why do you advocate for this?
Sure. So for me, my background is I have my hands in a lot of different types of real estate. I love parking because it's easy to manage, because there's minimal risk, and because there's consistent returns. So we kind of went over that earlier, where it was that once we own it, the hard work's done. And all I have to do is look in my bank account once a month, and there's a direct deposit in the bank account. That to me is pretty exciting to have hands-off cash flowing real estate.
Me
So
too.
that's really the largest reason I would say that we do parking.
Hey, Sam.
Hey.
Sorry.
Sure.
Yeah.
Go ahead.
Sam, I have a very quick, brief question, and thanks
Sure.
for your presentation. So, do you write same contract for the operators? Do you have a template that you give to all operators that these are the standard way that I want you to, these are standard guidelines that I want you to follow day-to-day operations? And then, if you have a guideline, do you expect certain amount of money? Certain amount of revenue from each of these operators? How do you ensure that they perform?
Right. So again, that goes back to part of the guaranteed lease. So for us, when we write these leases, we have the exact dollar amounts that we're getting paid, typically 5 to 7 years out. So we ensure they're performing by looking at our bank account. And I'm not trying to be snarky here at all, but I'm serious. Just look in your bank account and say, hey guys, did you pay on time? And if they didn't, then we have a phone call and some things to talk about, like why is there not a direct deposit to our bank account? That's how we ensure it. And as far as day-to-day operations, that's one of the things that we don't want our hands in, which is why we hire and pay really for an operator to be there, just so that we're not involved in the day-to-day operations. So no, we don't really have a contract that says, hey, this is how you operate the lot. It's really up to them, because let's say they pay us $100,000 a year for a lot. I hope they make $200,000 a year on it. That's up to them. And, the harder they work, the more money they make. So, we don't want to be involved in that in any way. We really want the incentive and the onus to be on them to perform.
Sam, I had a question. I think you were mentioning about Midwest, but I think most of us are in, Oregon or California area. You operate in Oregon or California area?
We do not currently. Unfortunately, the taxation structure, and we've looked at a lot of assets. We came very close, actually, on a deal in San Jose last year, but in the end, just the taxation just really killed it. So no, currently we're not looking in those markets.
So,
Okay.
so Sam, then primarily Midwest plus Texas?
That's correct.
Okay, and Texas includes San Antonio, Houston, Austin, Dallas, big growth cities, correct?
Correct.
Got it.
What about El Paso? Is El Paso on your list?
We haven't done any research in El Paso yet. So the short answer to that is it wouldn't be out of the question, but the answer is we've not looked there yet.
I don't think the population growth is as fast there as it is in the other major metropolitan areas in Texas.
I wouldn't think so either.
Yeah.
So we have a couple of questions that are in the conversation over on the side, and I'm just going to start at the top and go down. But one person has asked, is there a minimum amount to invest? And actually, it was the same person asked, do you have to be an accredited investor?
The answer to that question, the minimum is $50,000. And no, you do not. We both take sophisticated and accredited investors.
Okay. And then the next question is, does your company have relationships with internet parking applications such as HeroSpot?
Yeah, so we try not to use HeroSpot. I'm familiar with it, obviously, but HeroSpot's cool. I mean, I know it's great for the end user, but the operators we work with, we try to get away from HeroSpot just because of the amount of money it costs to the operator to actually allow HeroSpot to be in there. It's pretty exorbitant. So, if they can organically drive traffic other ways, we really, push for that and work with operators that are trying not to use HeroSpot.
All right. And then Jeff is asking, do your investors invest in a single property, or in a multiple properties? So I guess are you syndicating these properties, or do you have a fund that you're using to purchase multiple properties?
It's a single asset purchase. So if we get a group of investors together, they're going to invest in an LLC that owns that one particular asset and that asset only.
Hi Sam, this is Sriram. Great presentation. I had a question regarding how long do you expect an investor to be invested for a particular deal?
Sure. Yeah. So the short answer is indefinitely. And that's probably not the right answer because you might get scared when you hear that. The idea is that we cash out our investors in years 3 to 5. So if we can increase revenues, if we can do our value add strategies, and bring up numbers where we can refinance the asset and give everyone their money back, and yet still own it, and it's throwing off cash, we don't ever want to sell that. So at some point, yes, the asset will probably get disposed of, but we don't really book out a particular 10 or 15 year exit. As long as it's producing an income, we're going to leave it alone.
Hey Sam, is there a reason why these national operators just don't go buy their own lots? Why do they need you guys?
That's a great question. There are a mix of companies. There's a couple of big players that both own and operate. Then there are people like SP that just operate, and I think they've got the operations game down, and they figured out how to really make money at that, and so that's what they've stuck with. So yeah, why do they need us? Well, it kind of goes back to the fractured marketplace still, in that there's just so many mom and pop parcels and people that it's just not there's not just one big giant company that owns everything yet. So with that, why don't they go out and do it? Because it takes a lot of time and work to acquire these assets.
Okay, Sam, the 6 to 7% revenue position that you had, is that after the bank payments?
Yes. Yes. So, that would be a cash on cash return.
Okay.
Okay. And one basic question, can we withdraw at any point of time, or are we sort of locked in for some period of time?
Going back to the kind of the plan is always to cash everyone out. So if we can do a refinance and give everyone their money back, then that would be the withdrawal. Most of these assets, there's not the opportunity to go out and just take your money out. It's not a fund structure or something like that where we constantly have an influx of new capital. So it's typically, once you're in a deal, you're in the deal. But again, we're trying to give everybody their money back as quickly as we possibly can. But with that said, on paper and on the front end, there's not a promise or a, hey, you're exactly going to get your money back in 3 years. So there's not really a option to withdraw. That's the short answer.
Hey Sam, just to follow up on that, is it typical that you are able to go ahead and refi and give everyone their money back, or is that just a case by case?
It's case by case, but it's not uncommon. So that said, gosh, we did a bunch of deals last year where everybody got their money back. But it really just it's case by case, but it's not as hard as what you might think.
And on an average, in how much time did people get their money back?
3 to 5 years.
Okay, thank you.
Which geographic areas do you cover? Is it all over the United States?
Sure. No, we typically do really the Midwest. There's a few, the Midwest, central U.S., mostly the Midwest, and then a lot in Texas.
Sam?
Yes, ma'am.
So 2 questions. So the 6% return over that time span, or is that annual return?
Yeah, that's going to be an annual cash-on-cash return.
Okay.
That would not take into account refi, because obviously if you get all your money back and you made 6% on it, and now you got no money in the deal and it's still producing an income, I'll let the math wizards figure out what that actual return is. But
and then second question, as you're evaluating potential properties, etc., for deals, what's your approach right now to evaluate traffic pattern changes with, say, ride sharing, etc., and also automation as far as driverless cars? Is that part of your formula at this point?
Right. So again, we rely on a lot of the traffic flow, traffic counts, parking counts. That stuff that responsibility falls to the operator. So they're the ones we call, and they go out and actually do all that street level research so that they can know what they can afford to pay us for those assets. And as it pertains to driverless cars and things like that, we kind of went over that earlier, but we're not terribly concerned about that, especially if we're owning surface lots, simply because those can always be converted into use for something else. And again, anywhere people are paying for parking, it's going to be in a dense urban center. So, owning land in downtown Houston is not a bad thing.
Absolutely not. Where are you located, Sam?
I'm based out of Memphis, Tennessee.
Got it. Okay.
Well, Sam, I think you should take a trip up northwest because parking up here is quite expensive, I would say myself. So there's room for growth up here, I think.
I love the Northwest, so I need to schedule a vacation work trip and come up there and do some research. That's for sure.
Yes.
Sam, I don't know if you answered this before. What is your length of the contract with the operator?
Yeah, typically it's a 5 to 7 year lease. So and they don't want to sign, leases typically much longer than that because obviously they're exposing themselves to risk, and we don't really want to sign leases longer than that either because if things have dramatically shifted in our favor, we don't want to be getting significantly underpaid. So 5 to 7 years is a typical lease where we know, how far out we're going to get paid, and after that we renegotiate. But a lot, it's gosh, almost never that you'll find a once was parking lot that is no longer paid parking. I mean, if it's paid parking today, it's probably and it hasn't been redeveloped, of course, but it'll be paid parking in 10 years. So we don't stress too much about that. But yeah, the short answer is 5 to 7 years is typical lease length.
Sam, I have a question for you. So how do you qualify your operator? And if there are multiple operators bidding your deal, and how do you choose one over the others?
Yeah, there's only a few that we work with. So that being said, they're national operators, so they have their hands in almost every market. And so for us, we've got just a handful of contacts that we reach out to. And how do we choose between those? We kind of have our favorites, even of those 2 or 3 that we typically work with. So, we'll reach out to them, and then, whoever gives us the better terms, then that's the one we're going to work with.
Sam, we got a few more questions in the chat here. So one person says, do you have personal references of past investors that they can get in contact with in order to just to talk to them?
Yes, absolutely. If you want to shoot me an email, I'll be happy to send you some contacts of people that have invested with me in the past.
And then the next question is, what if you want to stay in the investment longer term? Even though the property refinances, can an investor stay in the investment after the refinance liquidity event?
Oh yeah, absolutely. And that's the beauty of refinancing is that all the investors get their money back, but you're going to retain your equity position in the deal. Absolutely.
And then lastly, if the property appreciates significantly at a point of refinance liquidity, do investors get some benefit on the appreciation?
Yes, if we can refinance it for more than we paid for it, yes, you could even get cash back, beyond what you put in for sure.
I'm going to give a quick plug here. I had Sam on my podcast a couple of weeks ago, and right now it's actually just was published. So I'll put a link down there to that interview with Sam as well if people are interested.
So, Sam, if you have, I don't know how much time we have left, but if we can quickly summarize how to get, I know that we can send you email or we can just sign up for the future opportunity, but if you can quickly summarize how to invest in this business. You mentioned something like 50,000. Is that a minimum requirement? So if you can break it down quickly, that would be appreciated.
Yeah, so let's say you get an opportunity notification from me, and you said, "Hey Sam, I want to invest." Yes, the minimum amount is 50,000, and that doesn't matter if it's cash you have on hand or via your self-directed IRA or whatever it is that you're using to invest. We have an LLC. You invest directly in that LLC, and then once you're invested, we get the deal closed. Then you should get quarterly distributions. Directly ACH to your account, and that should be, that's basically the way the deal works. Does that answer your question?
Yes, it does. We can have follow-up discussion later on, but that does. Thanks.
Okay, sure.
We just had a really good question put into the chat. What are some of the risks involved? Do you have an example of a deal that went bad to share?
Yeah, sure. Well, I mean, and we haven't really talked about this because I want to obviously keep this content as evergreen as possible. Obviously, right now we're in a weird state, really across the country, and I think you guys are aware of that. So we haven't really touched on this, and I don't want to give a Debbie Downer, ending to this. But the risk that we have right now is something that nobody could foresee. I mean, we budget typically 25 to 33% in the numbers for so say we have a downturn or say something doesn't go as planned. Well, let's go ahead and just build in a margin of error. We can't build in 100% downturn in parking because obviously I don't know how many of you guys are paying for parking, but I doubt many of us are paying to park right now. So obviously, and parking's not alone in kind of the wildness that we're in. Parking's really taking it on the chin right now, just because there's absolutely no one across the country is paying to park. So with that risk, obviously, that's not an always risk, but that's something that we're dealing with right now. And we're working with our operators, we're working with everybody in the industry, going, hey guys, how do we get through this? So, but more across the board, risks that you run are, taxation changes. If you can't control who's in office or who's raising taxes, I mean, that's happening in Chicago right now. It killed a bunch of deals for us just because the new sheriff in town, the assessor had decided that they were really just going to just tax commercial assets until they were blue in the face. And so as we just watched this wave of taxation increase across all commercial assets, we just said, man, we got to go. Like this is a risk that we can't afford to take on. So obviously that's an unknown risk. You could always make a buy in an area that the demand decreases for whatever reason. Say your favorite sports team moves arenas, and your primary driver was arena parking. And that happens in towns where somebody builds an arena and then they tear it down and build a new one. Kind of seems to be a theme across cities. So that's a risk. Like, well, now suddenly nobody wants to walk 2 miles to your parking lot anymore. So some of those things are risks, but again, a lot of times that can be mitigated with the fact that you're still buying dirt in major dense urban centers. So even with that, we take a bit of comfort in knowing that. All right. So you're owning land in high value areas. So those are a couple of the risks. Obviously, the biggest one just knowing what your demand is and making sure that demand is going to be there for the long term. I mean, we even went so far as to an asset we bought last year as to going through floor by floor and saying this whatever it was 60-story building. What's the tenant base here? Like why are they paying to park in our parking lot to go into this building? And by the time we got done with our research, that hey, you know what, this is great. This is gonna be here a long time. So those are some of the risks. Just making sure that you've adequately covered your demand, and making sure it's gonna be there for the long haul.
We have another question. Do you track sports changes like TB12 moving teams or LeBron moving teams?
I'll be forthright into saying I have no idea what that means. But what is, and I'm not a sports guy, so we'll just start there. I don't even know what that means, Daniel.
I don't know what it means either, to be honest. I'm not a sports guy either.
Okay. I'm sorry. I wish I knew.
The short answer is no. No.
Right. That's exactly right.
Sam, is your primary location for primary, I think, point of choosing a parking lot sports, or is that like airport, or what are the other businesses that you look forward while choosing a parking lot?
Yeah, that's a great question. So we do not personally invest in airport parking. You could. There are a couple of big companies that really have that mastered. Airport parking does not fare well in a recession. So we, kind of shy away from that. Again, for us, we want consistent, easy to manage, hands-off, cash-flowing assets, and we just don't want to have that risk with airport parking. But I'll quickly run through the demand generators. So one, sports parking, bar and weekend, night parking for like I said, bar and weekend traffic, courthouse parking. Courthouse parking is probably one of the most stable parkings you can buy because people are always going to court. It doesn't matter what the economy's doing. If you can buy a lot next to a courthouse, you've just bought a gold mine. And then, of course, jail parking that goes along with courthouse parking. And that's really about it. Or major businesses downtown. If there's a government office or if there's, something that people need to go into and come out of quickly, everything that we try to buy, we try to make it transient parking. So we do some monthly parking, but that's not where the money is. The number of times your lot can turn over a day is way more important than having somebody there for a month. So that said, those are the things that we look for. Is can this lot turn over a bunch? And those are the asset or the other demand generators that we kind of tend to try to focus around.
Thank you.
Sam, I had a question. So that 6% estimated returns that you're basing on the past lease term, and the lease term is usually how long? Like 6 or 7 years? Is that you said?
Right. Yeah, that's correct. And again, 6 to 8% and that's a rounded number. I mean, obviously it's deal by deal. And when we send something out, we'll give kind of a hey, this is what we project for this particular asset, and some are better, and we typically don't go under that. Like if I can't return 6% to our investors, it's just not worth the risk for us. I mean, it just doesn't make sense. So if it's not throwing off 6% cash on cash return, I'm not even monkeying with it. So that said, that's just an average. Hey, because people ask that question a lot, like what's parking typically produce? 6 to 8% cash on cash is fairly average.
Hey Sam, what's your kind of overhead or your cut of all this usually?
What are you asking? What does it cost us to stay in business?
No, what's your override? Like, what's your commission on the deals usually?
Oh, so when we close an asset, like what do we take for acquisition fees?
Yeah, in general.
Right. Yeah, typically 1 to 2%, depending on the deal. We did a deal last year where we took way more than 2% on it because it was such a small deal and the amount of work it's going to take to get it across the finish line, but it was also an enormous home run for us and our investors. And we present that obviously in every deal pack and say, hey, here's exactly what we're getting paid for presenting this deal to you.
Yeah. Okay.
Hi, not sure if you covered this item. For taxation purpose, the quarterly payouts that you do, does it go under as a regular income or a qualified dividend style income?
Yeah, so we'll give you a K1 at year end. So I would imagine that comes in as just regular income. But again, I'm not a tax accountant, so we just give you K1s at year end. So I don't know if that answers your question or not.
So K1, I'm familiar with 1099 div. So K1, I think, falls under an REIT style payout.
It could be. I don't know, to be honest.
Okay.
You said K1?
Yes.
Yeah, I never heard of that before. I'll look it up.
Yeah, it's a partner share. It's a partner share of an income. So if because you would be investing in the LLC, and
okay. Yeah, I'm familiar with that. Okay, so partner style income. Okay, so then you can write off any other expenses as part of the deal also.
Right, that's exactly right. Yeah, okay. That's exactly right. So it's your partner share of income, deductions, credits, etc. Whatever the company made and whatever you took home, that's what you're going to get a document for.
What's the range of how many partners there are in each LLC as it's established?
Yeah, we try to keep it as few as possible. And again, like for most of these assets, most of these acquisitions are under 5 million. I mean, you get into some garages and yeah, you're talking 10, 15 million. But if we're at 5 million, that means we're raising anywhere from 1 to 1.2 million. And if everybody throws in, 50 grand at 1.2 million, what is that? Bad math. 60. What is that? Gosh, should be 24 investors. Is that right? Yeah, 24 investors. So, we try to keep it as few as possible just because it makes our job a lot easier.
Okay. So maybe circling back to the tax question, as we as investors here would be partners in the LLC, it's the LLC tax return piece that would be one piece, and then our income from that is separate. So actually, that's a very good point. Who does the taxes on each of the LLCs?
Yeah, so we work with the Optimal Financial Group. They handle everything for us on the accounting tax preparation side.
Okay. And that's figured into, their costs are figured into the overhead amount.
Correct. Yeah, that they get paid directly out of each LLC for their accounting work.
Thank you.
All right, we've got about 3 more minutes for questions before we close the meeting off.
Sam, I had one more quick question about the 401k investments. Are there certain investment firms that allow their 401k to invest in your company? Because I think Intel does it with Fidelity, and I haven't seen Fidelity allowing us to directly manage our investments.
So you would have to find a not a executor. What's the word I'm looking for? A trust. Somebody that would manage a self-directed 401k. So, for example, for me, I use Quest Trust Company, and I have a self-directed IRA with Quest. So I can go to them and say, hey guys, I want to invest. I mean, I've got some stuff in a RV park in Texas. I've got stuff in a multifamily development in Colorado Springs, and I can just say that these are the investments I want to make, and these are the companies, the LLCs I want to invest in. So Quest handles that for me. I'm not sure that Quest does 401ks or not, but there are other self-directed 401k custodian. That's the right word I'm looking for. Custodians that will help you facilitate those transactions.
I think for Intel employees, this would be a separate IRA effort with the self-direction.
And that could be. I don't know obviously anything about how you guys function, but yeah.
How long have you been doing this, Sam?
Yeah, so this is my 3rd year in doing parking. And John, like I said, when we kind of started out, he's really the brains behind the business, and John's been in it for almost 20.
Got it. Thank you.
All right, if there's no more questions, we'll close it off. Thank you, Sam, so much for coming in. This has been one of the most engaged meetings we've ever had. So that's great. Thank you for everyone for your participation. And
you just need to get a bunch of engineers and tech people together.
Yeah, absolutely. If you want to look at the Inside Blue group, we've got a group there, so you can continue to ask questions, and we'll make sure that we can forward them on. Otherwise, the Pin, Yinning, and myself, who are looking for the guests, are always looking for people to bring into this meeting. So we have an open door policy if you want to talk about any particular guests or just about real estate in general. So thank you for coming, everyone. Have a great weekend. Oh, yeah.
Thank you, everyone. Have a good day. Bye-bye now.
Thanks. Thanks, Sam. Thanks, Daniel.
Thank you. Bye.
Thanks. Bye.
Thank you very much.
Is it possible to get somebody in at some point to talk more about the different options and choices on self-directed IRAs?
Yeah, and in fact, I will post them up in our group. But we have, we went through 4 or 5 speakers towards the end of last year on the topic. So those presentations are on the Inside Blue group as well. But I do want to get one on QERP. Type investments, because that's a new investing self-directed investment category that seems to be interesting as well.
Yeah. I mean, obviously the tax advantages of having that and how you do the process of getting the investment, like Sam was talking about, who's better at doing different types of directing.
Right. So yeah, I'll look for another speaker about that, and I'll also put out on Yammer the links to the recordings we already have.
Oh, thank you.
Yep. Does anybody have a particular topic that they want to see talked about? I know we've lost about half the group here, but the other half might not be listening. I don't know. But if you do have any topics, just let us know.
Hey, Daniel, I thought at some point we were going to talk about short-term rentals and also LLCs. I don't know if we ever got to those.
Yeah, I need to find people to cover those topics.
Oh, okay.
Yeah.
All right. I just want to make sure they're still on your list.
Thank you for putting those back on my radar.
No problem.
When you say short term, you mean like Airbnb style?
Yes.
Yes. Yeah. It can be Airbnb. There's other formats.
Right.
Yeah.
Yeah, that'd be interesting. Yeah.
Sorry, this is my first time joining this. Have you guys had anybody talk about apartment complex investment stuff like that?
I have had so many people with. So I am an apartment investor, and a lot of the people I tend to know are in that area. So I've actually had to section them off into a different calendar. So I'm going to try and bring in an apartment person maybe on the fourth week of each month, because I was getting too many of those types, and I wanted to have Airbnb and tax and self-directed IRAs and a few other topics in there. But yeah, definitely, I'll post on Yammer again some of the topics that we had for this. Last week we actually had my mentor joined us, and he spoke. His name was Mark Kenny, and we have a recordings page on Inside Blue that has a link to all the recordings. So okay. Email me, and I will also put it on Yammer.
Okay, thank you.
Have a great weekend, everyone.
All right,
Thanks,
thank
Daniel.
you.
You too.